It seems like it's the fall of the Roman Empire.
Hi, everyone. Welcome to Twin Shores Financial bi-weekly market update, where we share what we're seeing in the traditional and digital markets. I'm Alex Kaminer, our host, with Tim Nihill, certified financial planner, and Alex Krieger, our digital markets analyst. For today's topics, we're going to be talking about the biggest risks we're seeing in the banking industry, as well as 401k changes that we should be aware of. We're going to cover what's happening with the US government debt ceiling and go really in depth with that. And then for the crypto markets, we're also going to be talking about what's caused this recent pump. Are we going into a bull market or are we coming out of the bear market? And we're going to talk about that a little bit. If you enjoy, please do like, share, subscribe, and comment below any questions or comments you might have. Tim, off to you.
Oh, fantastic. Hello, everyone out there. Happy 2023. Glad to be here, kicking off a new calendar year. So, yeah, why don't we start with kind of our market updates and themes that we're seeing. There's some big meeting called Davos that's happening in Europe right now, where all the billionaires get together and they try to tell people what's going to happen with the economy and what's happening in the global markets and all that other fun stuff, which can obviously have some impact and translate down to the everyday investor and everyday people in everyday walks of life. So kind of the things that we're seeing lining up for this year, which I think are going to be very interesting. And part of it is just preparing for what we see as risks and what are the greatest risks to someone's portfolio and financial strategy. Because at the end of the day, first and foremost, we manage and mitigate risk. I would say it's a couple of things. I think this year is the year that the US dollar no longer dominates as the medium of exchange for oil. So if you do your homework and read up on the petrodollar system, anytime that oil is traded, a barrel of oil is traded across the world, no matter who you are, where you are, you have to use the US dollar in order to exchange and make that transaction. So that is no longer the case moving forward as China, Russia, I think even India, Saudi Arabia, Brazil are all getting on the same page that they are going to not use the US dollar and they are going to use other forms of currency like the Chinese yuan. So why is this a big deal? Well, this is a big deal because the US dollar is the United States' #1 export, and it is the basis for all business power and acumen that the United States has across the world. So essentially that means that the US dollar is losing its status as the reserve currency of the world, which means that the currency of the United States and its future is very, very much in question, especially in terms of the value. As someone who's looking at the potential risks that are going to come out of that, what are the biggest risks? Well, first and foremost, it's a devaluation or debasement of the US dollar, which means the US dollar basically goes to absolutely nothing. And if you look at the purchasing power over time of the US dollar, you'll realize it's been declining in value for the past 70 years anyways. And $1 worth, a dollar back in 1971 is probably worth 4 cents, maybe even 2 cents today. So I think everyone, especially at home in the United States, is going to wake up and understand that the United States dollar is not a store of value. That's a very, very big deal. It means that your cash is not a safe haven. The second part of this, which is going to create an issue, is one of the risks that we're seeing come up is the banking system. If you look at what's happening in the conversations that are going on with the FDIC committee in November in an internal meeting said they highly expect bail-ins to happen, which means if you go to your bank and try to access your money, there's a chance you won't be able to. The second part of that, and this is a huge part of this, because if you go and Google Glenn Beck, who is, I think he used to be some sort of libertarian, figurehead at some point in time, had a really, really popular radio show, seems to be tapped in. I think he does a good job talking about this. He talks about the digital US dollar. right? So what's the digital US dollar? Well, that is essentially the US dollar, which is on your phone in the form of a cryptocurrency, also known as a centralized bank digital currency, which then means you are going to transact with the Federal Reserve Bank and the US government, and you're no longer going to have your own independent banking system. This is also going to put pressure on the banks because it could strike panic and force people to pull out. And if people pull out even 3% of their bank or of their savings in their banking institutions right now in this country, it'll cause a complete run on the banks. The second part of that is it could possibly test FDIC insurance. And I don't think people understand that the reality of the FDIC insurance pool is this: there are about $9 trillion of deposits currently in the banking system in the United States. The FDIC insurance reserve pool is $125 billion, which essentially means that FDIC insurance, or the reserves backing the FDIC insurance pool, is only covering 1.3% of all deposits in the United States. So if you Google Glenn Beck and digital US dollar, he explains it very well. We're seeing many people come out and talk about this, that the US government's going to come in and confiscate everyone's cash in their bank accounts and exchange it for a digital dollar. And we're also hearing potentially it's not a one-to-one exchange. So for example, if I have $10,000 in the bank, the government can potentially come in and they say, okay, we're giving you $7,500 worth of US digital dollars. So
To help fight inflation, right? For all the money they printed. Yeah.
banks we think are very risky now. If you look at what happened with Goldman Sachs, Wells Fargo, all JP Morgan, all of their earnings are starting to come out. They are getting beat up. On top of that, last night, Bank of America came out and they said central bank digital currencies are the future of money. So this is going to happen, right?
Correct. And Bank of America is one of the 9 that was piloted for the program back in November of the CBDC.
Right. Cameron, I think you had the list, right? It was Wells, Bank of America, Citibank, JP Morgan, Bank of New York Mellon, like all of them have been testing this. And I saw a clip sent to me this morning where a woman, I have to find out who she is, don't quote me on this, but she said this will happen in the next 30 days. But I haven't been able to track down the trail of who this person was when they said it. So take that for what it's worth.
Yeah, I was seeing the same thing on Twitter by the end of the quarter. So end of February-ish, around then. I know that's not the end of the quarter, but they were saying mid-February. And
Right. And I think the crux of it, and this is very important because we're investors here. We're here to make money and build net worth and take advantage of investment opportunities, right? This just demonstrates how the United States system is not only broke, but it doesn't work for people. And I'm going to share this because we are going to get after the 401k industry this year, because I think people need to really understand what that system is and how if you're putting money in your 401k and that's the primary basis for your retirement, you are going to be bankrupt. I don't care how much you save in the thing. The 401k is built to make Wall Street money. On top of that, with the $1.7 billion in legislation that was passed right before the new year, there is a new clause which says that investment managers managing 401ks no longer have to manage the 401k account in the best interest and for the best interest of the individual investor or their beneficiaries. Like, this is a huge deal, right? Like, as an advisor, if I manage someone's 401k plan, I am personally and professionally liable to make sure that that is managed in their best interest and for the best interest of their beneficiaries. Well, the government came in and they just changed the law and said, no, that doesn't apply anymore, because if we think that something is socially credibly responsible, then investment management firms have full access and full right to take people's retirement assets and put it into these solutions which are more socially responsible. Which means that everybody here who's banking on their 401ks and relying on them as the primary retirement vehicle to fund their retirement, that account is no longer going to be managed with their best interest in mind. Right? That's a huge deal. So there's more to get into on that one. But I think with a lot of things we saw coming out through year end and going into this year, I think 2023 is going to be a very, very interesting year from a market perspective. And I think it's starting to show that the traditional system that's been in place with dollar cost averaging, asset allocation, buying index funds, getting into a 401k, not only will it never work, but it's all broken. And what is really getting exposed is these things are not being managed with people's best interests in mind. And then on top of that, we're at risk of finding out really the things that we have grown up to rely upon are not necessarily true and not as safe as we might think that they are. So we'll have more to come on that one.
I got a question for you, Tim. How, for the people out there, how would they go and look at this? So if I'm in work for, I don't know, a big corporation, I look at my 401k, who do I go to, or HR would tell me what if they're in ESG, or how do they know?
It depends on the size of the organization, right? Small, medium, large company. But let's say you're working for a large company. It will all be put into the contracts and the summary plan descriptions, which are available on everyone's 401k website. But that's such a deep dive that at the end of the day, you're never really going to know. You're only going to know by when you see changes made to your account and changes to the investment menus that are available. Now, there are ways, and we're actually going to do a series on this, is how to build a better 401k for people, which we're going to talk about. So we'll go through the strategies on how to get ahead of this one. And more importantly is, it's not to say that a 401k is necessarily bad, but you have to find out how you can make sure that your investments are working in your best interest, and how to get it out of the system that's set up in the 401k world so you can achieve a more successful retirement outcome, right? And I think you have to think of retirement planning cannot just be, hey, I maximize my 401k, because that's not good. It's not good enough. It has to be, okay, I have to take 401k, I have to take Roth IRAs, I have to take traditional IRAs, I have to take annuities. How can I strategize and use a blend of all of these different strategies to really build a more secure and a more successful outcome for retirement, right?
Makes sense. Yeah.
On top of that, if you want to do your homework, there are just different 401k groups that are available on LinkedIn that you can become a part of. And then it's just following the 401k news. Like this one, and it's kind of funny because this one's not being talked about. There are professionals out there who do a lot of work in the 401k world that do not want to talk about this publicly because it might potentially impact their business and their futures in the 401k world. But, as someone who's been on the inside of that world for a long, long time, it's not good. Right. I mean, there are some massive philosophical and fiduciary issues that are there where, like we say with our clients, like, listen, this isn't what you think it is. So you just have to become aware of it and work with the right people. And then just the other resources, just follow our stuff because we're going to be talking about it.
Yeah,
so
we'll be talking about 401k.
Right. Whether it's our blogs on our website, which we're starting to roll out with new content, or our YouTube channel, we're going to talk about this one for sure. So anyways, I'm more of a glass half full type of person. And so for 2023, I just look at, okay, what are the opportunities that are going to come out of this from an investment perspective, and what are we seeing in play today? So keep this nice and short. I just think we're going to start getting to a return on fundamentals I think our asset bubbles temporarily are gonna pop before it's gonna be, okay, do we return to fundamentals or do we just keep printing money till eternity and creating a massive bubble? And then I think physical assets are gonna be a tremendous opportunity, right? So whether it's gold and silver, I mean, I think if you look at what's happening right now, there's a massive case for a big bull run in the gold and silver and metals and commodities markets, especially with this transition to green energy, ESG, and all that stuff, because that's still continuing to be pushed. Real estate, farmland, energy, oil, natural gas. Like, I know if as an investor in one of my investments that I'm part of a pool that owns 25 or 27 different Dunkin' Donuts franchises down south, right? So I know I can physically drive to that Dunkin' Donuts that I'm invested in and buy a coffee, which then that goes back to myself. So I think there's going to be a real return to physical assets. I think we're going to see a massive transition in real estate. Cantor Fitzgerald was talking about this week, what's going to happen with these old office buildings that are no longer being occupied. It's New York, Boston, DC, San Francisco, Atlanta, etc. I think you're going to start seeing these buildings get converted into housing. So I think there are going to be some tremendous opportunities. Is it going to be in the S&P 500? No. Bond markets? Probably not, although the bond markets are transitioning. So I think it's one of those things that you have to say, okay, am I invested? What am I invested in? Is it a real asset or is it a financial paper instrument? And then making sure that you have a blend of both that work for you and work for your risk tolerance.
Well, on that note, another thing that we wanted to talk about today is the US government debt ceiling, and what happens when if the US government defaults on its debt. Let's first talk about what the debt ceiling is, and that is the amount of money that the federal government is legally allowed to borrow to pay its bills. And it's projected to hit the ceiling by January 19th if Congress doesn't do something to change that. This would be the first time in our history that we would default on our debt, but this happens a lot where they have to pass a bill that would force us to raise the debt ceiling. So the likelihood of that is fairly low. Let's talk about what would happen if that was the case. The US government would not be able to pay salaries or benefits for federal employees, military vets, or contractors. Social Security, Medicare, and Medicaid payments would stop. Tax refunds will probably not go out. Student loans and benefits, grants would not get paid. Federal facilities would have to close. And then interest rates would increase more than they already have. Credit card rates would increase, mortgage would increase, car loans would increase, and the cost to import goods would also increase. And this would all lead to a lot more higher inflation. And then talking about like 401ks, retirement accounts that are tied to the stock market, anything that you have invested in the S&P, that's going to take a huge hit. The value of the US dollar would drop on the world market, and the world economy would also take a huge hit. Now, if this were to happen, the best case scenario would be a mild recession, but again, the likelihood of that is fairly low. So they usually do raise the debt ceiling every time this problem rises. Do we think that that's going to stop anytime soon, or do we think that we're just going to continue to raise the debt ceiling and just continue to accumulate more debt?
Hypothetically, it probably will happen that way, but there's other forces in the world, other countries that are over the shenanigans. They're about to change the petrodollar and change it to the yuan petrodollar. There's other countries that aren't, they're over the game. They're done with us. They also hold the debt, don't they? They hold all this debt. Japan, China, they hold all these treasuries. So we're in their hand.
Yeah, you have to pay attention to who's buying US treasuries. So who knows? It's a huge risk. They haven't not raised the ceiling. And if they do, they just continue to print money. Either way, it's it's more inflation. I look at it from, if you look at from a global perspective, it really seems like the days of the United States system are done. It seems like it's the fall of the Roman Empire. There are a lot of similarities, if you're a history buff, between the fall of the Roman Empire and what's going on here. In fact, at the fall of the end of the Roman Empire, what did they do? They printed money and sent cash to everybody. Of course, they didn't actually have cash machines, right? They had wooden whatever tokens or whatever they had, IOUs and all that stuff. But between the petrodollar replacement, between digital assets, the rise of Bitcoin, I think in the United States, the gig's kind of up.
Well, I was reading an article. Do you think crypto had any effect into the inflation aspect of them being able just to make coins out of thin air too? I'm just curious. I was reading an article about that over the weekend and them saying that with inflation as high as it is, they can't, it couldn't only be, how do I say this? It's not only the money printer from the Fed, it's other big instances of private organizations or private money making crypto or other companies bringing in, I don't call it fake money or whatever you want to call it, but
I think,
making stuff out of thin air.
I don't know, my feeling towards it is, I kind of feel like if crypto wasn't there, our problem would be a lot worse.
Oh, I 100% agree. I think it would have exacerbated the problem of COVID.
Right. Where would the money have gone?
Correct.
There are common themes that come out of meeting with people, especially people that are retired and older that we've talked about. And I'm sorry, man, the America that we grew up in is not the America today. And I think you have to just take a step back and observe. And once you do, you'll really start to see the writing on the wall and what's truly happening, because there's an agenda being pushed by the World Economic Forum, the WHO. It's being pushed down, and they're trying to push it down across the globe. And you can tell by the legislation that's coming through Washington, D.C., it has nothing to do with America, and they don't give a crap about America anymore.
They have to take down America and the Constitution and all that stuff in order to get their plan to work. We're the only ones stopping in their way.
Not that we're ever going to get into the middle of that, but I think that's why the case for physical assets is really going to start to prove itself and take over this year. And back to your point, Camner, who knows? They probably will continue to raise the debt ceiling, though.
Oh, well, if that happens, what's the timeline? Do we think that other countries will just give up on the United States, on the US dollar, like in the next 5-10 years? Or do we think it's going to be a slow thing where countries will slowly drop off over time using the US dollar as a reference, as a contingency?
I think the long-term utilization of the dollar could actually increase, because there are a lot of currencies out there that, the Turkish lira comes to mind, right? You could probably replace that. No offense.
That's us.
I have friends in Turkey. I love them, and I hear it's amazing over there. I just think it's an interesting thing, because it seems like it's all the niceties that I think we've gotten used to in this country are going to go away. They're talking and trying to push this agenda and that's why demand, right? The Federal Reserve is focused on crushing consumer demand, right? So then, okay, so think about the crux of this. You're going to inflate everyone's lifestyle from 2008 and to 2023, and then you're going to say, nope, you can't have that lifestyle anymore, and tell everyone they have to go backwards. That's essentially what's getting played out right now. And for those that see this and play it properly, your lifestyle is going to go through the roof. But for most people who are not doing their homework, they're not going to know the wise choice to make, and they're just not going to be in the right positions.
Look at Social Security and Medicare and Medicaid. They've been 40 years, they've been kicking the can down the road, or 20 years down the road. And look, they had the first time in forever due to inflation had to raise the annual stipend. Where does that money come from?
Yep.
Where like it's going to be, like you
Well,
said, interesting to see people's way of living. You can't get rid of it or whatever. But like, what about all those people for those past years paying into it? What do you tell them? And all this stuff. Like, I don't know. It's interesting.
Right. Well, and that's where we talked about before, like universal basic income is coming. You're not going to have Social Security anymore. And look at it this way. I mean, if we get a digital dollar, they could just create as many digital dollars as possible. They don't have to worry about cutting down trees anymore. So it's probably good for the forests.
Yeah.
See there, we just went green. All right. Well,
Do you think there'll be competitions with the CBDC? Once say they do roll it out, what does private go away? Does Bitcoin, does USDC Circle, do they go away? And CBDCs, you're not allowed to compete with them, do you think? How do you think that's going to work out?
I don't know. It depends on the people. I mean, do they want to have their money controlled by the government?
But isn't it somewhat already controlled by the government? We're already digital. Not, I guess you still have the option to pay in cash and whatnot, but everyone uses their phone to Apple Pay, your debit card, your credit card. You're already digital. So don't they already control it? I don't know. Just food for thought.
Yeah.
Well, on the note of cryptocurrency, why don't we switch things up and just talk about what's been happening in the crypto markets? I think everybody is seeing this small little pump that's happening. So Alex, what are your thoughts on that? What are we seeing?
It's interesting. No really big news came out, and $5 billion was added to the market cap, and it's just moving. We're finally moving back up, and it's interesting to see. We need to break 22.8 for BTC, and then I think we're going to go up to 25, maybe 28,000 from there, and everything else should follow. I don't know if people watch Fox News, but Tucker Carlson the other day was on there talking about the FAA shutdown for planes last week, and was saying maybe in a coincidence of Bitcoin pumping, maybe the US government had a ransomware payment due they had to do in order to get it, which seemed pretty interesting correlation to happen, or coincidence at the same time this was all happening. So haven't found any more news about that. Just still trying to dig and find what I can find about it. But if other media sources are talking about it, big ones, it has to be real, right? Expecting what's going to come up for the next few months. I think, like you were saying, Tim, commodities are going to have a big pump. Now crypto should follow. I don't think there won't be any downturns at all. There will still be some downturns, but I do think we're in the trajectory of starting to get on our way back up to all-time highs starting maybe after this year. I think this year we stay in the 25,000, but don't be surprised that it could go up to 35, 40. I think this year we pretty much stay in this 20 to 25,000 range to accumulate more.
Do you think we're still in this crypto winter this era?
Yes and no. Geopolitical aspects of crypto always matter. You keep seeing, I think last week, India wants to ban cryptocurrency. They all want control over where the money's going and transparency, really. So you may see more countries banning it, trying to get clarity and trying to figure out where everything's going, right? And where the money's moving to.
The Justice Department announcement you're talking about?
Yeah, the Justice
There's
Department.
not much information out there right now about this.
Yeah, I'm on the Department of Justice website. Actually, this is enforcement activity. So here's the crux of it. It's not against crypto, right? But what they're saying is they're looking at apparently another money laundering scheme, right? So I think it's part of the crypto cleanup. And, like we talked about, probably 80% of current cryptocurrency protocols, maybe even 90% are not going to be there, right? Like,
That's right.
we all agree on this. Like, no one wants to be part of a money laundering scheme, right? You
No.
want to invest in protocols and platforms that are going to be there that have actual implications on the blockchain and can help take businesses, as like the Avalanche partnership with Amazon Web Services a couple weeks ago. So
But how do I say this? As a crypto enthusiast and been in this industry for, I would say, a pretty long time, for the past 5 to 7 years, how do you know what is a scam and what isn't a scam right away, right? You don't know until 6 months to a year you've already been in the coin, right? You know what I mean?
If you're a reasonable investor, you're not dumping your life savings into it.
No, of course not. Of course not.
Right. And that's, I think, the crux of it at the end of the day. Like,
I think
listen,
that's more of a mentality factor of the crypto people. It's go big or go home type mentality instead of trying to sit and build your wealth over 5, 7 years, right? And play the market rather, you know what I mean? They see it pumping, the moon boys, you hear the terms and
no, the pump and dump schemes.
yeah. And
Listen,
like,
let's call a spade a spade. There are pump and dump schemes in all markets across the entire world: real estate, commodities, banking, financial services, digital assets. This is not unique. This has been happening for thousands and thousands of years. This is more of an enforcement piece. I don't think it's part of the cleanup.
interesting.
It's part of the cleanup. But it would be nice, like in our world, there needs to be more clarity around this. Like, cryptocurrency is here to stay. And at the same time, I mean, our laws that were written in 1933, 34, and 40, like, enough's enough. Like, this is a whole different world. We have to reform the SEC. We have to reform FINRA. We have to reform even our own government. And we have to reform supervision and jurisdiction and enforcement. It just is so archaic, and that's causing a huge problem.
Correct. But how do I say this? We need people that know what they're talking about in order to help make these rules. You can't have Congress or some people that don't know anything about Web 3.0 and barely the internet make the rules for this stuff.
We're not on here to solve the world's problems right now, but it's obviously time for new leadership across the board. So millennials and Gen Zers, away you go. Yeah,
I think this ultimately is just good for the cryptocurrency industry in a way, because like with all of these scammers and exchanges that are scamming people and schemes, it'll just bring to light the people who aren't doing that, and it'll just be good for the industry.
right. I mean, so this platform that they're enforcing, Bitslotto,
Yeah.
another one I haven't heard of. And this demonstrates why it is so important to work with professionals that know what they're doing.
Right.
If you had one story that came out of this, like, you have to work with people that are doing their homework, are watching over all their stuff, right? Like,
Correct. No. Well,
Even-
what I
even-
don't understand though is they go after this small exchange that does this exchange does less than $1 million in volume a day. Like, why are you, and you don't go after FTX for how many years? Like 2 or 3 years? Like,
Well,
I get it. I get it. They're making an example. They're trying to clean up the space, but how do you brush stuff underneath the rug for?
That doesn't matter, Alex. I think so according to this, they processed more than $700 million worth of illicit funds, including millions into ransomware proceeds. I don't necessarily see this with the information that we have as necessarily a bad thing. But I think we'd all agree, if you're going to get into this space, do your homework, but at the same time, work with people who are doing more homework than you're doing, because they're watching this every day.
Correct.
Right. That's the crux of it. And I mean, we met Sam and the FTX folks. They're just it's a smell test sometimes. You gotta go with instinct, but if you think if you're going after a get rich scheme, yeah, you're gonna pay the price on it. And that's indicative of cryptocurrency. It's indicative of financial services. I mean, look at structured notes that are just flooded the marketplaces. Go back and watch The Big Short, the movie The Big Short,
Great film.
right? The CDO market, they were leveraged 20 to 1. Hey, on $50 million, how much money has claims to that $50 million? Oh, $1 billion. What? Right? Like,
Yeah,
once you
makes
start
no
getting
sense.
into instruments that are like synthetic and they're really complicated and they do this, and this, and they're awesome, the red flag has to go up immediately. Because that's really the type of stuff that gets people in trouble, especially long term.
Yeah. Well, on that note, I think we've completely gone over everything that we've wanted to complete. This is definitely one of the longer market updates that we have ever produced, but it's the first one of 2023. So I think that that's good, leading it off with a bang.
Cheers.
Yeah.
Cheers,
So,
yeah, right?
on behalf of Twin Shores Financial, thank you guys all for tuning in. If you enjoyed and want to keep up to date on the markets, please tune in every other Thursday for your financial information. Please don't forget to like, share, subscribe. And if you have any questions, please comment them down below. Tim, Alex, any last words?
No, happy 2023, everyone. Thanks for listening. Come to us with comments, topics that you want us to cover. We're happy to do it.
Also, check us out on social media.
Absolutely.
Not your keys, not your coins, guys. Make sure you know it. I'm gonna keep that reiterating it in 2023.
It's
What
good.
happened?
Not your keys, not your coins. So
Not your
awesome.
keys,
Thank
not
you,
your-
everyone.